Hello everyone. Welcome to the second class of BFM Warrior series. As you know, in this Warrior series, we are covering case studies plus numericals plus concepts plus theory, everything for all the subjects. I am covering it for BFM and ABM. Other mentors are covering it for other subjects. So don't miss even a single lecture. Very important. We are covering PYQs, previously asked questions for case studies and numericals. Okay, and everything. You can get a concept behind it. See, concept is very important in this. Okay, so don't miss it. And what will we be doing today? Today we will be dealing with basically numerical, forex numerical. This forex numerical is a repeated question in the exam. Repeated, constantly it is repeated. Okay, because I have seen this numerical so many times in the every exam, one numerical is obviously there. So don't miss it and let's start. On 1st June, a customer requests to book a forward contract for retirement of an import bill of USD 1 lakh. USD amount is 1 lakh. Due for payment on 15th September. See, the due for payment on 15th September. It is from your Macmillan book. Huh? So, due for payment on 15th September. Given spot rates are USD INR is 75.2729. Forward premium is given as spot June 10-12, July 21-23, August 32-34, September 43-45, August to September. Now this is a bit tricky part. August to September means 15 September. It is 6-7. So for that 15 days also the forward points are given. Plus one more point, check this. Charge margin of 0.2% on the spot rate. Kindly remember. Try to solve this problem. This is a sure problem in your exam. Be sure about it. You'll be definitely getting this numerical in the exam. It's a big 5 marks case study. Okay? So, let's start. Firstly, understand what is the case. Booking a forward contract for retirement of an import bill. Kindly note few points over here. First is import bill. Whenever you have import bill, you have to take the right side, this side. Number 1. Number 2, due for payment on 15th September. So it is in the mid of September, right? Then charge margin of 0.2% on the spot rate. Margin of 0.2%. Got it? So let's start. There are two twists in this problem. Two twists. Which are the two twists? Number 1 is margin is to be charged on the spot rate. This is first twist. Generally, in any numerical, we charge the margin on the end rate which we get. End rate. But here, the margin is to be charged on the spot rate. Number 1. Number 2 twist is August to 15 September forward rates are given. So when such thing is given, you cannot use buy low, sell high concept over here. Whenever you have the exact rate, not to use buy low, sell high. This is very, very, very important concept. Whenever you have an exact rate on certain date, any date, whenever you are having the exact rate, you should never ever use the buy low, sell high concept. Never use it. Got it? So with keeping these two in mind, let's move ahead. And always remember 6-7 means what? There are two digits 0607. Now kindly note, we are focusing on import bill. So we'll be focusing everywhere on the right side, not the left side. See this. This is always buy, this is always sell. Okay? Have I written it somewhere? Let me show you. See, whenever you have like this side is always buy and this side is always sell. Okay? So now we are focusing on import. Import means sell. Import is always sell. Okay, and export is always buy. Export is always buy. So now we are focusing on import. So we'll be focusing on sell part. So everywhere you'll have to look at is sell part. Right side, right side, right side. No left side. So what are the 3 points which we should focus? One is right side. Second is margin on spot. Third is this August to 15 September. So let's start now. Move ahead. Say this. Let's say this date is anything. We don't know the date. Let's take it 1st June. This transaction is happening when? Forward rate. This forward transaction is happening when? September 15th. So I have to book the rate for September 15th. Okay? I have to book the rate for September 15th. Now, whenever I have to book the rate for September 15th, I'll have to see two parts. One is September 1, starting of the month and ending of the month. So, September 1, starting of the month. That month, don't focus on any other month. If you want September 15th, focus on September start, September end. Okay? So, here, September start, September end. Now, what is the rate for September start? Now, one thing you note, if you look at the rates given over here, see these rates. Spot of June is given, July is given, August is given, and September is given. So, I want now September 1 rate. September 1. So, kindly note one point. Whenever you want beginning of any month, the rate is of the earlier month. Whenever you want beginning of any month, the rate is of the earlier month. Because when I say July rate, it means it's for the July end. When I say August rate, it means it is for the August end. When I say September rate, it means it is for the September end. Getting this? Okay, I'll ask you one question now. Suppose if I get a rate for November rate is given. So when will that November rate be applicable? At the beginning of November or at the end of November? Type in the comment section. Will it be at the beginning of November or will it be at the end of November? Where is it? Yes. Everyone, think over it. Just now I gave you the hint also. The whole idea I gave you. It is always at the end. Okay? End. Now one more question. Now suppose if I want, look at this only. Suppose if I want the rate for 1st of July. I want the rate for 1st of July. Which rate will I take? 1st of July. See this, June end is given, July end is given. But where is 1st of July? 1st of July will be earlier month. So, June end will be equal to 1st of July rate. Pay attention everyone, very important part. June end will be equal to 1st of July rate. Okay? Now I'll ask you one question. I want the rate for September beginning. September beginning. So September beginning means what rate will it be? August end. Isn't it? August end. Look at it. September beginning. It will be August end. Right? So I'll take August end rate. What is August end rate? For that what I have to do? Let's write the forward points. What are the forward points? So forward points over here, August end rate is 32.34. What do you mean by 32.34? Right side sell is 34 points. So it is taken to be taken in 0.34. Now is this currency in premium or discount? See, whenever you have right side bigger, this 34, whenever you have right side bigger, see, I'll show you over here also. Whenever if you have right side bigger, right bigger, right, okay, right bigger, big. this is small. Then you say the currency is in premium. Okay? And whenever it's reverse, left side is bigger, right side is small. Then you say the currency is in discount. What is the advantage and what is the use of premium and discount? Whenever you have the currency in premium, pay attention. Whenever you have the currency in premium, you have to add it to the spot rate. See this, you will have to plus this, add it to the spot rate. Pay attention everyone. Whenever you have the currency in premium, you will have to add it to the spot rate. Whenever you have the currency in discount, you have to subtract it from the spot rate. Very clear concept should be there in your mind. Okay? So now move on. With this, let's move on. So now look at it. August end rate I am having. What is the spot rate now? 75.29. How do you know the spot rate? See, it's given. USD spot is 75.2729. Okay. So take this 29. Why 27? Because 27 is for sale, for export, buy. I want sell now, import. So 75.29. Alright. So 75.29 plus 0.34. Why plus? Because just now I told you currency is in premium. So I'll be adding this 75.29 plus 0.34. Add these two. Add these to everyone. You must get this answer as 75.63. Do it practically also. Everyone do it yourself. In exam, if you have practice on the calci, it's very easy. If you don't have practice on the calci, very difficult. Try this everyone. Practice on the calci, everyone. So it is 75.63. Okay. Now there is the twist which I told you. The twist is they have given the rate from August end to September 15th. So this is given to you. So this is what 07, right? 0607. Say this 67. So take this 7. Why? Because we are focusing always on this sell side, import. So do it 07. Now what will I do for this 07? Add or subtract? Again look at it. Is the currency in premium or discount? Say this 67. Right side is bigger. If right side is bigger, what does it mean? It means the currency is in premium. So again I'll add it. Right? Clear? So I'll add this now. See this 75.63 plus 0.07 plus. So what will I do now? Plus 0.07. So 75.70. 75.70. So what have I done up till now? I have completed the forward rate point. Forward rate, whatever is that, I have completed it. But there is still something remaining. That was a twist, right? Margin. Generally, now let me clarify this point. Generally, whenever we calculate the TT margin, this TT margin, in this problem, what is it given? Say this over here. Margin is to be calculated on the spot rate. It's clearly mentioned. Generally, we don't do this thing. We don't do it. Generally. Okay? Generally, what do? We calculate it on this last rate, 75.70. Generally, we calculated for 75.70. Whatever you have achieved at the end, TT margin will be calculated on that end rate. But in this problem, it's specifically mentioned. Calculate the TT margin on the spot. So this is a spot. So 20%, sorry, 0.2%, okay, into spot. 20% is a huge amount. So 0.2%, 0.2%, so 0.2 divided by 100. Okay. So 0.2 upon 100 into 75.29. Multiply this, you will be getting it as 0.15. 0.15. Everyone try this. Everyone should try this. Everyone must know this. How to solve it. All of you should try this. Okay? So, 0.15, right? 0.15, got it? Now, what will you do with this 0.15? Will you add or subtract? Whenever you are selling anything, you have to add the TT margin. Whenever you are selling anything, you have to add the TT margin. Okay? Why add? While selling, why do we add? And while buying, we subtract it. Why do we add it while selling? Do you know? Okay, I'll give you a simple example. Suppose if you buy a fridge, a refrigerator at your home, you buy it from that showroom guy will send some expenses have been occurred. So this is an expense. Logic is simple in all the businesses. You do it refrigerator selling or you do it dollar selling. Expenses seller, the one who is selling it, will always try to add the expenses so that he doesn't have to bear it. If this is not added, then the TT expenses, the seller or the bank will have to bear it. Right? So that's why we always add it while selling. Now add it then. 75.70, you got this answer, plus 0.15. So it is 75.85. This much is the rate to be quoted to the customer. This much is the rate to be quoted to the customer for the import. Okay, for the import. So, suppose if I ask you what is the amount? What is the amount? I'll be this, it will come. So it is 75.85 into $1 lakh. Why 1 lakh? Because see this, $1 lakh are over here. Retirement of a USD, 1 lakh. Okay? Got it, everyone? Clear? Clear, everyone? So now, let's move on. Let's go for the revision. Some important parts of the over here in this numerical. Let's go for the revision of those. What are the important parts? See this. I'll write it over here. Okay? Let me write it over here because you must know these. It shouldn't happen that you forget it later. You must know all these. Okay? Let me bring in a new slide. Okay? See this. So what are the important points? Let's cover those. Okay? First one. Whenever you have to export, you will always sell. Okay? And reverse, I won't write the reverse thing now. If export is sell, then obviously import is buy. Clear? Whenever you have to do the export, you have to sell. Number one. Number two, forward margin. Forward. Okay? For forward points. You should use buy low, sell high when you don't know the rates in between. Whenever you have to do in between month, use buy low, sell high. BLSH, I'll write it. Buy low, sell high. If it is on the first date or the last date, no buy low, sell high. Clear? Number three. Same. Okay, I'll write under this only forward points. If your currency is in premium, then add the margin, add the forward margin, add. Okay, if your currency is in discount, then subtract. How it is in premium? How is it in premium? It will be in premium if the right side is bigger. That I told you. TT margin. Whenever you are selling, you should always add. Whenever you are buying, you should always subtract. Don't forget these basics. Join the paid classes. The new batches are starting just now. Join them, you'll get more details. This is just an half an hour session. There you'll get it in details. I teach all the numericals, objective questions, case studies. Everything is covered in that. How to join the batches? But see, for joining the batches, you have to just download the Adapt 24/7 app. Don't miss this. Okay, download it through the app. Okay, purchase it through the app, because in the app you'll be getting 1% extra. Okay, it's available on both Google, Android as well as iPhone. Now, see this. I would always suggest you to join. The best is CIB Increment Mahapack. In this Mahapack, you are getting all the batches. Whichever batches are there, you are getting them. So join this Increment Mahapack. Double validity offer is going on right now. You buy for 6 months, you get it for 12 months. You buy for 12 months, you get it for 24 months. So it's a huge thing. Okay. So even the discount part, look at this. Put the code Y432. Okay, put the code Y432. Click on enter. 79% discount plus 1% extra. So 80% discount you're getting. Huge thing it is, isn't it? What do you get in this Mahapack? You get 15 plus batches per subject, plus ebooks, plus mock tests, plus you get physical books. Physical question banks are also available. Plus you get study planner. And live classes, recorded sessions, those are obviously there. And always purchase through the app. Don't miss this. Okay? So join the batches and the Mahapack immediately.